What is going on, Bedrock family? Rock and roll. Here we go. It's another episode on Monday night. All right, guys. Thanks for joining. I'm pretty excited actually about what we're talking about tonight. It's going to be some fun. Quite a history lesson as well. And let's kick this thing off. All right. And as you guys go ahead and like and subscribe to the channel, as you guys join. But yeah, we're going to talk quite a bit about a couple things today. And like I mentioned, today's topics, we're going to talk about the history of the US dollar, why Bitcoin was created, and what problem is it solving. And for those of you guys, also, there's kind of a fun token giveaway that we're going to do at the end of the video. But basically, step one, you just type, honestly, in the live chat. I really don't care what you guys say. Just say what's up. And then same thing with a comment. I know I have hashtag Bedrock in the live chat. It doesn't really matter. Just leave a comment on the dang video afterwards once we post it. Definitely helps with the algorithm, and it'll kind of help us reach out to more people as we continue to do these things. And then we'll announce the winner on the next video. All right, so let's jump into this. So we have on our next slide here. There we go. Here's the history or a timeline of the U.S. dollar and what we're really going to talk about. So we're going to go from 1913 all the way past this up until, I would say, today in the 2022. But there's quite a bit of stuff that we're going to talk about. So the first thing we're going to talk about is the Federal Reserve, and they started off in 1913, and so it's kind of cool. When this first happened, the first bill was a $10 bill, and they backed everything with gold, which was super cool. So as gold was backed up by the dollar, pretty much we had a really strong dollar, and it helped out quite a bit. And then as we go on to the next part of our timeline, we have the 1920s, which a lot of you guys have probably heard about, the Roaring Twenties. And essentially what happened at this time, we see the movie of Great Gatsby and all the fun, crazy parties going on. But since the Federal Reserve came out with a strong dollar, really what ended up happening at that point was you had your school teachers, you had the mailman, you had like even the milkman that would go door to door. Everybody was making money because the dollar was super strong. And as this happened, people were buying cars and doing all kinds of crazy things. And then they started investing into the stock market. And the stock market was booming, and like where people would literally put in money, and within a few weeks it would go up, 40, 50%. A couple times it'd go up 100, 200%. And so everyone was living it large. And what ended up happening is they thought they were a modern day Warren Buffett. And so what happened is people started going to the banks even to get loans, which is not good. And they would get basically a private loan so that way they could fill up, the stock market or put more money into the stock market. Well, what ended up happening is the banks started to see this, and they wanted to get in on it as well. They're like, hey, let's jump in on this. And so the Federal Reserve, what they ended up doing is they started to take people's savings money and investing that into the stock market, which is kind of a big no-no, right? And so this continued to happen. And as this ended up happening, we had something that wasn't very good, which a lot of you guys, I'm sure, have heard of the saying Black Friday. Well, there's a thing called Black Thursday. All right, so on Black Thursday, in October 24th, 1929, 12.8 million shares were sold, which hit the papers very quickly. And you can see in these two articles here, you have the Daily News, Black Thursday, Wall Street in a panic as stocks crash. It's same thing on the other side, Wall Street in panic as stocks crash, right? And so there was multiple newspapers that had announced this. And that was huge. I mean, that took down a lot of things. And billions of dollars were lost, even though there was millions of shares sold in this. And it kind of continued where we had this crazy sell-off the following day. So I know if you guys look at the peak here between 1929 and 1930, you can kind of see it dipped pretty far down, like, I don't know, maybe about an inch down. And then as the markets closed, well, then that following Tuesday, it dropped way, way down. And so we kind of had this steady decline that continued, which kind of started, and that's when it started the Great Depression. And you can see the market over 3 years. And a lot of this was with production slowing down before this had happened. And so now everyone is kind of out of a job and they're like, what's going on? So at this point, we had 4.9, which is almost a full 25% of the workforce that in 1932, the unemployment rate was just out of control. And so what happened from there is we had our first federal dollar inflation in 1933. All right, so this is when basically gold became illegal, and everyone had to turn in their money to the banks, like, so you can see right here, under executive order of the president, right? Your gold coins, your gold bullion, and all certificates are now owned by the Federal Reserve Bank. And they had to turn them in before May 1st. So for every ounce of gold that you turned in, the bank would pay you out $20.67. And then a year later, the government raised the price of gold to $35 an ounce. So basically, the government decided to just give itself a nice fat raise, right, in cash. So 69% increase in cash just by shortly doing that. And so that pretty much led us to our first inflation against gold or against the dollar. And not until 1941 is actually, what kind of got us out of that depression was, you can see a lot of people, like the factories started going and booming. So you could see between 1932 here to 1940, that little, I don't know, Ponzi scheme or scam, whatever you want to call it, of turning in your gold, what was called the New Deal, didn't really work out that great. Like it held them off for a tiny bit, but it wasn't really enough to do it until World War II. And so this is when we really became the big, great, mighty nation again. Our economies were booming, factories were going crazy, and that's kind of what got us back on our feet. So after World War II, now we have something that is very scary that happened in 1971. Basically, we had the full faith and credit of the U.S. government, and they decided we don't need to back our dollars up with gold anymore. What we're going to do is just go ahead and print as much money and have everyone put faith in us and print away. So rather than backing up every dollar that was out in circulation and having to have gold back it up, something that I forgot to mention is actually shortly after, in 1933, when people went back after they were in the Great Depression, because the banks had actually, in the stock market, they used their money. When they would go back to get a dollar, every dollar they had in their savings account, they only were able to receive 10 cents because that's all that the bank had and was able to give them back. And so this is something here that can be a little bit scary, is that in 1971, they kind of forgot about what happened with the Great Depression, or just didn't care anymore. And they're like, you know what? We're doing so good. Everyone should pay attention. And we're just gonna print away. So that's what happened in 1971. And so you guys can see kind of on this chart here, if we're looking at this graph of the currency in circulation. So from the time of 1970 or 1971, but you can see on the graph it says 1970, you can see that we've decided to just print and print and print. And for a lot of us, like myself, I was born in 1991, so I've only known our country to print money. That's literally the only thing that I've really noticed. And so as we've just consumed and consumed, we haven't really been a producer, right? And so with the production that's happened, everything's gone overseas, because as we've produced more money, it's been harder to create an economy where you can pay people over here what they really deserve to be paid. And this is just how inflation happens, right? And how it kind of was created. And as we look at what happened since COVID in 2020, it's really gone on a super, super steep curve. And so I'm not here to really talk to you guys about the stock market, but I want you guys to understand a little bit about how our currency has pretty much started since 1913 with the Federal Reserve and where we're at today, because I think it's super important for everyone to understand this concept. So as we continue, so we had the 2008 crash, right? The housing crisis of 2008. Everyone freaking knows about this. And we've definitely felt the effects of this. During this crash, there was someone that was like, you know what, I see this potentially happening again. And so they decided to make something called Bitcoin, right? And I want to talk to you guys about Bitcoin. And this is when Bitcoin was born. And it was born, and what's really cool about it is essentially it's something that's made, Robert Kiyosaki calls this the people's money, because how it gains value is based upon the faith of people putting money into Bitcoin, right? So if there was no transactions happening or anything like that, then it would be worth nothing. So I want to kind of tell you guys a story that, just kind of the first Bitcoin transaction and how it happened. And since I don't know how to say this guy's name, I'm just going to call him Han. But we're going to read this. So since cryptocurrency wasn't yet a thing in the commercial world, Han reached out to Bitcoin Talk community and openly mentioned that he would trade his Bitcoins to anyone who would buy him 2 pizzas. In 2010, a man responded and said, sure, I'll do that. And so this guy basically called up Han, or however they did that. And Han spent 10,000 Bitcoins at a local pizza restaurant to buy himself these 2 pizzas. And, you could look at that today as, wow, it's a crazy value if we looked at how this worked. But that had to happen to start the transaction or to make it have some sort of value, right? And so it says, as of today's value, which is over 35K, currently these 2 pizzas can be regarded as the costliest pizzas of all time, which, yes, that's true. But it is, that's awesome. Like, this is how it started. So now from 2010, as we jump, this gets a little bit more detailed, but I want you guys to understand this because this is really important. So if you've ever heard of a halving before, a lot of people don't know what the heck that means. But Bitcoin is essentially just a math equation that can be solved 21 million times, all right? And in the beginning of it, there's something called a block, right? And on the blockchain, it takes about 9.5 minutes. We'll round it up to 10 minutes. So every 10 minutes, there's new blocks on the blockchain. So when you look at block number in column, I'd call it C, or the third column, where it says 0 Genesis block. Every 10 minutes, there's a new block that comes out, which means 50 new Bitcoin could be mined for. And all mining is essentially, it's a proof of work, meaning someone on a computer has validated transactions, and now they're eligible to receive a reward in Bitcoin. And so every 10 minutes, 50 Bitcoin were coming in circulation in the beginning in 2009. And then as we go on into 2012, so every 4 years, right, we have a new halving. And essentially what happens there is the block rewards get cut down in half, making it where less Bitcoin will come into circulation. So with that being said, why I'm telling you this is because Bitcoin has a fixed supply, meaning only 21 million can ever be printed. And somebody saw this as the US government, they keep printing money. They keep on just printing and printing away, which is inflating our money, which makes it worth less. And so right here, you can see eventually, there's only going to be so many Bitcoin that can be mined as that block reward gets smaller and smaller. It gets cut in half. It keeps getting cut in half. And that's why they call it a halving. All right, so it's a little bit detailed, but as you can see on the far right-hand side, where it says $12.35, that was the first halving. Then you have the second, the third, the fourth, which we actually just had. I'm not sure what that price was, but I think it was somewhere up in the $20,000 range. Don't quote me on that, but that's my guess. And then it's going to continue to go as we continue on. And so something about, we've been in kind of a little slaughter the last few days in the market. It's been red. We've had 25% drop after, 25% drop. And it's going to go down. That's okay. But what you guys need to understand is this is something that can't be constantly printed over and over and over again. So in the far right corner, we can see on the circulating supply today of this Bitcoin chart. This is from CoinMarketCap from today. We're roughly at $36,000 about 20 minutes ago. And the circulating supply, there's 18.9 million Bitcoins in circulation that are out for sale in the world, with a max supply of 21 million. So as that is being, there's not enough Bitcoin for every single person in the world to have that. That being said, Bitcoin is divisible and can be divided down into a small amount. Like I can get $10 or $5 worth of Bitcoin, which is a lot easier than carrying around bars of gold and trying to slice off little slivers and figure out what it's worth at that time. And so this is really why, or the problem that we're solving, right? And so the problem that we're solving here, all in all, is that cryptocurrency is simply just a bet against the inflation of the U.S. dollar. And that's kind of a wrap. I mean, that's the problem that we're solving is against inflation. And so I didn't want to scare you guys with the stock market stuff or anything like that. But really, this is pretty much what we wanted to go over today. Just kind of keep it simple so you guys would understand. And yeah, that's pretty much it. So I'll say hi for a second. Appreciate you guys all jumping on. We're going to keep this thing going. And on Wednesday and Thursday, we'll probably do a little bit more about walking through or how you guys can get Bedrock and what's really cool about that. But there's a lot of cryptocurrencies out there that have come out, and some of them have a fixed supply and some of them don't, right? And so the ones that you really would want to look for is ones with a fixed supply. That's something that we've done with Bedrock. And yeah, if you guys want to know more, just go ahead and, there's tons of videos that we're going to keep putting out, but we have other videos that will go ahead and pop up either here or here on this side. Thanks for watching, guys. We'll see you guys later. Rock and roll.